What's going on, everybody? My name's Jose from deepdatainvesting.com, and today we'll be going over net profit margin. Now, before we get started, go to deepdatainvesting.com, sign up there. It's totally free. And what we do is we share everything that we've been learning about investing in the stock market so that you don't have to waste your time going through dozens and hundreds of online resources. Now, in the future, we're planning to implement different tools and different resources so that you as the investor can take advantage and spot different opportunities in the market. Now, what is net profit margin? Well, let's break this down a little, okay? So net profit is really the profit that the company gets to keep after subtracting all the different expenses. This is cost of goods sold, operating expenses, interest, taxes. Now, really, net profit is the bottom line. It's called the bottom line because it's literally the bottom line of an income statement. Now, really quick, if you haven't checked out the income statement video, go ahead and check that out. I'll link it in the cards up above so that you can get a better understanding of all the different things that we're talking about here. Now, net profit margin is simply just a profitability ratio. It's the net income represented as a percentage of the total revenue. Now, by representing the net income as a percentage helps you as the investor understand how big of a slice of a pie the company actually gets to keep as profit. Now, let's take a look at this pie chart. Now, this pie chart is literally 100% of the total revenue, and you can see the different slices here. Now, you can see interest, taxes, operating expenses, cost of goods sold, and then this slice of pie right here that's popping out is the net profit. This is representing the net profit as a percentage. You can see that's 10%. This means there is a net profit margin of 10%. So you can see visually how net profit margin helps you understand how much profit this business gets to take. Now, let's go over the formula really quick. And it's really simple. It's simply just a fraction. It's net income divided by total revenue. And then you can multiply this by 100 so you can get a nice percentage. Now, under the hood, net income really is the total revenue minus all the expenses. Like mentioned before, it's cost of goods sold, operating expenses, interest, and taxes. And we'll take a look at how this works in a later practical example. But for now, let's take a look at a simple example. So let's say company X makes a net profit of $1,000 and has a total sales of $10,000. Now let's figure out the net profit margin from this using the formula that we just learned. So if we take $1,000 of the net profit and we divide this by $10,000, the total revenue, we multiply this by 100 so we can get a percentage, we can see that company X makes 10% net profit margin. Now let's take a look at some use cases here. So net profit margin really is an important indicator of a business's financial health. Now, by using the net profit margin over several different accounting periods, it helps you determine if a company is managing their expenses and other overheads and seeing if they're really controlled or contained. Now, since net profit margin is really just a ratio, you can use it to compare different companies to each other. Of course, them being in the same industry and using the same business model, and you can compare their different performances. Now, here are some things to take into consideration. Look at the big picture. Don't just rely on net profit margin to assess a company. Now, company management can actually make their net profit margins look or seem higher by deliberately cutting back on capital expenditures. Now, of course, this is up to you as the investor to see how this will impact a company's long-term vision. Pay attention to the different items that may skew the net profit margins, such as, like, let's say a big company division sell-off, or let's say that the company is paying a big chunk of interest that year. Let's hop into the computer and actually take a look at a practical example to see how to actually calculate net profit margin. We're going to be using Adobe's income statement, so let's check it out. All right, and just like that, we're back in the SEC EDGAR Database. And if you haven't checked out that video yet, I'll link it in the cards up above. We're back here and we're taking a look at Adobe's latest 10K filings. We're taking a look at the income statement right here. And what we're going to do is we're just going to extract all these different values and we're going to place them in the spreadsheet so that it could be easily manipulated. So you can see that the income statement is here. We're just going to copy these values and we're going to go drag it out here to the spreadsheet. So now we have all the copied values over from the 10K. You can see the accounting periods being from 2017 to 2019. Now you can see each and individual sections with their appropriate items. And what we're going to do is we're just going to take the net income margins right here. If you could recall, the formula is simple. And now I put it down here so that it's easily accessible here for you guys. So it's the net income divided by the total revenue, and then we'll multiply that by 100 so we can get the nice percentage. Now, in the case of the sheets, Google Sheets has a nice feature where you can click on the decimal that you have and you can convert it easily into a percentage by just clicking that button. So we'll just go ahead and do that. So we're going to go over this net profit margin together. Let's calculate this together. So it's really simple. All you have to do is, we're going to click on the equal sign to convert it into a formula. And then we're going to divide the net income, which you'll find right here. And we'll divide that by the total revenue, which you can find on this line right here, line 6. And that is all, folks. Now you have a net profit margin. In Adobe's case, they have a 26.42% net profit margin, which is really excellent here. So what we can do is we can just copy this formula over to the different accounting periods, and it'll actually just extract the relative items for that accounting period. So we just handle over the corner or drag, it'll automatically populate those. So you can see it has a nice range between 23 and 26 net profit margins, which is really excellent. And so what you can see here is analyzing the net profit margin is really simple, especially if you're working in a spreadsheet just like this. Now, of course, if you want to check out the written blog about this topic, you can go to deepdatainvesting.com, sign up for our newsletter, and you can hover over to the blogs side of things and you can see all the different blogs that we've been posting. So it's been a few months since we've been working on these topics, and I hope that this is valuable resources for you guys. So again, just sign up to deepdatainvesting.com and get those emails bi-weekly. That's it for this one. Thank you guys so much for watching. Leave this video a like, subscribe, leave a comment if you think this video really helped you out. Stick around because we'll be covering a bunch of different topics like this, a bunch of ratios and a bunch of metrics, things that will help you as the investor determine if an investment is a good one or not. Don't forget to go to deepdatainvesting.com. Happy holidays. We'll see you on the next one.